in various different areas of our life, retail, etc. And I think it takes time for people to get comfortable with technology and money. And if you look at certain areas of the financial markets, such as maybe insurance hasn't fundamentally changed for about 400 years. So, there is a lot of incumbency and lethargy in that. And I think, once people started to get used to utilizing technology in various areas of their life, it becomes natural that you start to look at technology in your finances. And I think that's what we're starting to see now.
I mean, I think for us in the UK, I think, unfortunately to say, is like 2008 was I think a bit of a catalyst for fintech like starting to grow, like especially in the sectors like lending. A lot of the banks stepped back, and then fintech companies came to the table, and we see that in various other industries. In the particular case of TransferWise and international transfers, I mean, trust is a huge element. I mean, we're asking people to send money to our bank account. We're just a website. So I think as people get more and more familiar with the internet, they're feeling a lot more and more comfortable to trust us. So that's where we kind of were created in 2010.
I agree with my fellow panelists. I think it's a combination of things. Number one, obviously, yes, we're seeing a tremendous number of startups in the fintech space. That's very clear, whether it's device players or it is internet players and what have you. But the reasons behind that, I believe, are a combination. One, consumer is getting much more comfortable in using the internet. We have much higher volumes, much higher mass adoption of internet products and services. And then the stakeholders in the industry are also much more ready in terms of dealing with these fintech startups and getting a role for them in the ecosystem. So it's a combination of all of that.
So you all mentioned pretty much trust. So my next question is, how can consumers actually trust the fintech startups? And what is your experience?
I think trust is something that there are a number of dimensions to that. So first of all, there's trust in actually the technology working the way it needs to work and repeatable and people's experience is similar each time. But then, the other side of the trust is, I guess as was just mentioned, when you're looking at money protections and understanding the support infrastructure around that, and the fact that it's quite a transparent system. So people, it's not a black box. You don't put your money into a black box and then don't understand what it comes from. So I think trust is then using best practices, standards, looking at other parts of the world to make sure that, if there are areas that are regulated, in particular areas, you're trying to pick those best practices up from the regulated areas, incorporate them into your proposition, so that you start to build that trust with consumers ultimately. Yeah, and I think trust goes to the institutions as well, because the institutions need to feel trust that they can start working with smaller businesses, smaller partners who might be doing the innovation, but they still need to trust at the end of the day on that.
Yeah, I mean, for us, trust is a huge thing. It's always been a big thing from the beginning. Essentially, the company was founded by two Estonians, and as I said, they were asking people to send money to their bank account, and then they promised to send it out on the other end in another country. So it sounds like a typical scam. But you get the first early adopters. They use the service, they like it. The money comes out on the other end. They trust their friend. Then they mention it to their friends, and then trust is built up. But like for us, like on our website and everything we do in terms of communication is all about like instilling as much trust as we can on the product. But we definitely rely on our users to tell the other people about their experience, and that's a great way we grow and a great way we build trust.
Great.
Yeah, I think at Visa, trust is a key component, like security of the transaction, interoperability, global reach. All of those are behind the Visa brand, and this is what we try to kind of, whenever there is Visa, there is the security of the transaction, there is the global interoperability and reach everywhere you want to be. So I believe all of that Visa also being part of the ecosystem is helping driving trust, whether it is, for example, in the recent launch of Apple Pay, where we had Visa token service behind it, Samsung Pay again. So I think all of this is helping increase the trust of the consumer.
Great. So I spent earlier in the beginning of the year about 2 months in the Bay Area, and this year the real big buzz was fintech. What I wanted to ask you is, how is this replicated in the MENA region, and what can the MENA region learn from the Western world in that space?
I mean, I definitely don't know much about the MENA region. It's my first time in Dubai, but part of the reason I'm here is that we are looking at the region. For a lot of, for a lot of companies like ourselves, we need to be regulated, right? And a big deterrent to entering a region is when the regulator makes it difficult, or if our space is almost like undefined. So especially in the UAE, our model doesn't get work as it could, because from a regulatory perspective, you still have to do face-to-face KYC, which is clearly something that's not the case in the UK, in Europe, in the US. So being able to access the regulator, talk to them, and work on a model that that works all over in other places of the world is really important. I mean, in the UK now we've just hired a guy, TransferWise, that used to be at the regulator, the FCA, and basically the FCA had set up a separate department that consulted fintech startups. And I think a few other countries in the world, like Japan, are trying to do that. So definitely, like, regulation and making it as easy as possible for startups to get up and running is critical.
Just for the benefit of the non-banking audience, KYC is know your customers. So basically what regulator requires you to do is physically face the client and basically go through this thick pack of documents that basically ask you about where did you get your money, where are you investing your money, do you understand the products, etc., etc. And even for simple transactions, people need to go through this. So thanks very much, Victor.
Yeah. I think the MENA region, yes, obviously is a little bit behind, but it's catching up. A little bit behind because the whole internet industry moved later. So the region caught up social media. Internet grew at the time when social media was growing fast. So the region caught up social media much faster than e-commerce. But now, as we speak, the region is catching up quite significantly. We at Visa just announced last week that we launched Visa Checkout here in the UAE. So this is also to help e-commerce and the growth of the e-commerce in the region. Also, some announcements in terms of preparing banks for token data so that they can process tokens. So a number of things are happening in that regard.
What I find interesting about this region is, I mean, if you take the UAE, for example, the adoption or the use of smartphones, for example, is massive. Right? I think it's higher than in the West. Right? But then the exploitation of that technology is actually where it lags. So, you still have lots of sites that try to do e-commerce here. It's cash on delivery, for example, when something gets delivered. Now, there's no need to do that. There really isn't. But it's a practice that people have got used to. The problem with that is it starts to add or can add additional costs to transactions. And what happens a lot in the West, or what's been happening in the UK and the US markets, is new business models tend to thrive on lowering of transaction cost. And that's where you tend to get the disruption, because the established financial players, the large banks, they've got the financial muscle. So it tends to be businesses that can move quicker, but have also found an area of exploitation, I guess, in terms of price point.
Great. So you very nicely introducing the next topic, which is from the banks and financial institutions' perspective. First of all, are they aware of the fintech space and how disruptive it is? Because my personal experience, at least in the region, is that most executives from the bank that I have spoken to have vaguely heard about it, but don't really know about it, and they don't really have a strategy for sure about it. So My first question is, how aware are banks and financial institutions of what's going on, and what do you think is the impact on the banks and the financial institutions?
Shall I?
Yeah, sure.
So we are working closely with our partner banks in order to prepare them for the surge in the fintech industry and the surge in digital in general, payments and e-commerce. I think the banks are moving pretty fast. Products like Visa Token Service, for example, help take the plastic card into the digital world while maintaining the security, the robustness, and the global interoperability and reach of the card in the digital world rather than the physical world. So all of this helps preparing the bank in order to accept the payments on digital, be safe and secure that the payments are going to be processed, and accordingly engage more players in the industry.
We work with banks in every market we operate in. We use the bank to process our payments there. And essentially, I think banks, at least in Europe and the US, are aware of what's going on in fintech. But you're right. I don't think many of them do have a strategy. Like they have all these executive committees that look at fintech and try to figure out how they're being disintermediated. But the most progressive banks that we found are the ones that are realizing that fintech companies have another skill set to the banks. Fintech companies are good at marketing, they're good at building technology, good at making products easy, and the banks that we like working with are the ones that are progressive and they're allowing us to power our services. So I think there's a big industry for banks that focus on technology that enables fintech companies, and there's some players in the US that are doing this, some players in the UK, and those are the ones that I think are going to be more successful.
I think it's Jamie Dimon that issued out a warning to the bankers in the US saying that Silicon Valley's coming. It's definitely the case that the more progressive or the more forward-thinking banks look at some of these fintech platforms as actually almost an outsource of innovation. If I look at the space that I'm in, the whole peer-to-peer marketplace, you've got Citigroup who've just announced a partnership with Lending Club in the UK, Santander and RBS partner with the likes of Funding Circle and some others. So the banks are starting to realize these are actually platforms. These are distribution platforms for us, because where a lot of the banks suffer is they have legacy and they have legacy costs. And after a while, that legacy cost really hampers their cost-income ratios in terms of from a transactional perspective. So therefore, it's important that they're always open to alternative technologies, alternative businesses that can help them still provide services to their customers, because of course they are still wanting to retain services. And actually think about it, if you're a bank and you're partnering with various different fintech startups, you'd rather lose certain lines of your business but retain the majority of cash management, etc. for businesses, rather than lose out completely to a bank that takes you out of the equation. So I think it's about they're becoming more and more aware of it. But in the West, the banks are starting to flock, and I think that's also evidenced by the amount of financial institution big hitters, ex-CEOs, board members that are now sitting on fintech startups, etc.
So do you guys think that the banks are actually threatened by fintech? And if so, how do you expect them to react? Is there going to be a price war, or do you think it's more on the acquisition or partnership stage? How that will play?
I think it depends. They're not threatened from the industry as a whole, but there are certain players, some players that sometimes disintermediate some of the players like the bank in the process. So whenever the bank is feeling, whenever there's the perception that the bank is being disintermediated, sometimes they take a defensive step. For example, in Visa checkout, what we make sure on the online commerce transaction is the bank brand is on the front of the transaction. It leads by the bank brand, so that the bank brand is being also, consumers are aware of their relationship with the banks, even online, the same they are aware offline. So these kind of activities incentivize the banks to be part of the new ecosystem rather than to play a game against the new ecosystem.
I think like any industry in the world, I think different players have to adapt. I think the banks, the businesses they do now, they do multiple different businesses. They do lending, they do payments, they do, factoring. They'll have to figure out which businesses they're good in and which businesses their other players are better in. And as the world goes online, there'll be more and more payments. So there's definitely a place for the banks. The industry, the financial industry, is still growing, or parts of it are still growing. So if you position yourself properly, you'll grow with it. But you have to adapt. You're not going to have the same mix forever.
Yeah, I don't think you can put the genie back in the bottle. And that to me is the crux, is that when consumers in particular get used to a certain way of doing things, they're not going to accept going backwards. If you look at just technology, not fintech, but technology 15 years ago, corporations had the most sophisticated technology. Now it's actually reversed. Right? The consumer gets access through his iPads or his iPhones to more developed technology quicker, and is able to recycle that, where a business might have a business cycle of 5 to 7 years before it does a technology upgrade in certain systems. So you've got a whole shift now between what consumers expect and demand. So banks have to adapt to that. And I think probably the quickest way to do that is partnerships. It's to partner with the right kind of fintech startups that share the right ethos and the vision, but allow them to get products that consumers want to market faster. Because it's not about the big eat the small anymore, it's actually about the fast eat the slow. And therefore it's important that you get to market quickly.
And one more thing on the banks. It's interesting. Like in the U.S., there's a company called Simple that does that's basically a banking layer. They allow you to have like a current account and do transactions, and they're using a bank as the infrastructure. But now in the UK, just recently, there's been 2 companies that are both applying for full-blown banking licenses, so startups. So I think that's a first. I don't think there's any other country in the world where there's startups applying for full-fledged banking licenses. So we'll see what happens with that.
Also, one thing to add here, for example, just as an example, when banks are incentivized right, or when they see the value, they participate. For example, more than 170 banks in the US are already enabled by Visa token service and are offering Apple Pay as a product. So.
Great. So basically the banks and financial institutions have, the way I view it, 3 strategies. One is partner, as Craig said, with startups. The second one is invest in-house and basically develop the technologies in-house. And they definitely do have the money. I'm not sure if they have the expertise. And the third one is purely acquire. On the acquisition side, though, or on the partnership side, let's take the region. For example, on the peer-to-peer, I know Beehive. On the robo investments, we just invested in Finerd, which I think is the first one in the region, but there's not that many startups that people can partner with. So let's assume Emirates NDB partners with Beehive or even acquires Beehive. What is Mashreq going to do? So what advice would you give out of these 3 options, or if you have any other options, would be great to hear them.
So the 3 options being obviously partnering.
Acquisition, partnerships, or in-house.
I think it's going to depend. Each bank will have a view on that. I agree with you. I think for a lot of banks, they may have the skill sets to innovate, but then it's also, can you innovate quickly enough? Because time to market is a critical factor in anything, not just fintech, but any tech space whatsoever. You can't have 10 different Facebooks. It just doesn't really work. So I think what you will tend to find is you'll find strategic partnerships in a lot of cases. Yes, that might result in an acquisition. My previous business, we worked very closely with IBM. IBM ended up acquiring us. So you do start to build up a good relationship when you have a strategic partnership that may naturally lend itself to acquisition. But I think there is, a wealth of talent in this region. You can see that's growing. You've got a demographic that means you've got a lot younger people, and they are going to be looking to be coming up with ideas, drive innovation. It would make a lot of sense for financial institutions in particular in this region to start working closely, incubating, maybe putting some money in and almost creating their own little startup communities to see if a fintech product comes out of that.
I mean, I think maybe there's like a bit of a fourth option where, which is, I guess, a more, banks have to move away from their traditional business, but banks are like, used to owning the customer. And, maybe a fourth option is that they have to think about enabling businesses, like Beehive, like TransferWise, to own that customer for that particular route. So I think that's a much more difficult thing for a bank to do. But I think enabling all these fintech businesses is a good strategy.
Yeah, I do agree with that as well. I believe there's a space for everyone, and I'm a believer in partnerships, in opening up the space for innovators to participate in the ecosystem. Again, in Visa, we announced that we're opening an innovation center in Dubai, and our vision is that VisaNet should have standard APIs, and this is what we're working on, and this is what we're heading to, standard APIs and SDKs for the developers to participate in the ecosystem and to be able to offer fintech technology in partnership with the players in the ecosystem.
So who do you think will be the winners out of fintech? Because, as you said, the banks can actually have like new streams that maybe up until now they didn't have, or even have, because transactions get cheaper now, so maybe they can tap into more clients, etc. On the other hand, it might be the consumers because transaction costs are going down. Could it be the startups because they're actually making money? So who do you think is the real winner behind it? Might even be regulators, because now with all these robo-investments and automated solutions, the risk factor goes down as well. So who is the ultimate winner?
I definitely hope that the customer's winning here. I presume competition leads to better products. So definitely the customer's winning. And then for who provides those services, I don't know, to be seen. I believe there will be some fintech startups that are going to be, dominating certain fields.
Yeah, we all hope that the customer, that the end consumer is the winner at the end, and that competition drive everybody to innovate, and ultimately the consumer would win and competition would regulate the ecosystem. So this is what we hope for.
Yeah, I'd agree. I think consumers tend to be quite savvy, so the best value proposition is where they will tend to put their business, and therefore if fintech is offering a good solution as the customer sees it, then you'd expect them to use that. I think over time, it's yet to play out. Google might be the world's largest bank in 10 years' time, for all we know. It's really going to come back to user experience. That's the other thing. Is consumers will once you get over the trust issue, then user experience, convenience. That's what it'll all be about, right? So the ability to do things on the go, and that I think will start to make a big difference. And the problem or the challenge that, say, some banks may have is the amount of legacy systems that you're trying to connect to talk to each other at the back end. It can look like a can of spaghetti when you look at some of the back-end systems of banks, and I think that's where they will find challenges, and that's why they should be looking to partner as we go forward. But yeah, you hope the consumer or the customer is the ultimate beneficiary.
Great, so I fully agree with you on the customer side, which brings us to the next topic, which is the customers. So again, sorry Victor for the region, but how does the region adapt to these new financial technologies? Because we see the uptake going up, but we also touched upon the trust factor. And especially in the region, trust is very, very important, if not more so than in the Western world. So what is your experience in terms of how customers actually adapt to these new technologies?
From our perspective, it's education, right? You've got to educate. And you know, it helps. I think if we'd have tried to do Beehive 2 years earlier, maybe even a year earlier here, it just wouldn't work. We needed the global landscape to be changing. We needed the likes of Lending Club IPO so that it started to put it onto a global stage. And you know, statistics around the world is, you know, it's doubling every year. It's expected to be a $1 trillion industry by 2025. So suddenly you've got some external factors outside of the region that start to give people some comfort that actually this is a burgeoning industry. So once you've got that, then it really is about education, transparency, communication with customers with queries, you know, it's FAQs, it's all the kind of things so that people can start to get a feel and an understanding. And then the other point, really, which is probably why fintech is succeeding, is you need a low entry point for consumers. You know, so if you look at peer-to-peer, if people are making 10% returns, then that kind of return was only ever open to people who went via private banks and could invest in, you know, certain investments that were only open to a select few, and that might require $1 million plus. Through the use of technology, you're able to bring that down and allow people, you know, people on Beehive can invest from 100 dirhams, so just over $25. So straight away, people can then feel their way into the user experience, whether it's for them, whether they're comfortable. So I think that's, you know, those factors become really important.
I mean, I think even though it's not a region, I think there's it's actually quite interesting because I think it's about like the value proposition you bring. So TransferWise is basically 10 times cheaper than your bank to send money abroad, right? So if you're sending £1,000, it costs you 5. With your bank, it costs you like 50. And we say we've saved like around $200 million so far for people sending money internationally. And what's interesting about this region is that it's a massive outflow region of remittances, right? So there are people here that are sending money back to India, Pakistan, Bangladesh. I mean, you guys know better where the money's flowing. And they're doing this on a very regular basis, and that's the whole purpose they're here. So if you go to someone and tell them you're going to actually send your family, you know, 20% more every month, you know, they'll come to TransferWise or to whoever's providing that service, try it out, you know, send like $5, you know, low entry point, try it out for $5, money arrives on the other end, and then they'll never look back, right? Because it's such a strong value proposition. Why would you ever send money in a more expensive way?
Yeah, I think it's a combination of trust, convenience, and value. If you don't give those to the consumer, what is the driver to move from the traditional old type cash or plastic cards, if you want to say, into the digital world? There has to be some added value. I believe none of the like recent products that we're hearing about, like Apple Pay, mobile payment, Facebook payment through messaging, Google through payment through email, none of them would pick up unless the consumer perceives the value and they are designed in a way that is easier to use than the typical way of using payment.
So my next question is, to what extent is fintech Sharia compliant? And I understand there is different parts to it. For example, you know, just robo-investment, you know, by definition, if you invest in Sharia compliant shares, then it's Sharia compliant. But for example, in peer-to-peer lending, etc., to what extent, you know, is it Sharia compliant?
So we're looking at pioneering this in the peer-to-peer space. So we, you know, and it's a journey. You don't sit here and say you've got it all worked out. But the way that we tend to work is we allow people who are comfortable knowing that that transaction has been processed in a Sharia-compliant way, in a Sharia-compliant manner. And we use a commodity murabaha structure below it, and you know that's okay for some people. For other people, they would like to move even further along the curve in terms of Sharia-compliant products. But it's, you know, for us, it's the first. It's trying to bring Islamic. You know, there's not an awful lot of Islamic finance money out there, and it's struggling for a home, right? It's struggling to be put to work. So I think any fintech products that can help drive that and start to, especially in this region, it start to drive investment, it start to drive, investment for GDP, for job growth, etc. It's going to be really important. So I think anybody looking to try to bring the Sharia compliant or Islamic finance side in is a good thing.
You wouldn't comment on.
Yeah, we're not finance, right? So I think we're okay.
So
I'm not an expert also in Sharia compliance in particular, but regulations in general, I think varies a lot in the region and even a little bit wider than the MENA region. We've seen countries where peer-to-peer transfer is fully acceptable. The CIS, Russia countries are like, it's booming peer-to-peer money transfer. Here in the MENA region, it's a little bit more tight in terms of regulations. But we hope that concerns will be addressed and then the market opens up.
Great. So because we're running short of time, I'll have one last question and then we'll open it up to our audience. So the next question is on the regulator side. So in the region, I received the questions actually a couple of days ago about how easy or hard is it to set up a startup here. And I would it is as hard as it is, but then being like financially regulated here is pretty much a nightmare. And I'd like to ask your experience, because from what I know is you either set up a company locally and then you need central bank approval, but still you need more than 50% ownership by locals. The second option is you have a outside UAE company and then you open a rep office. Third one is you go into the IFC. And I just wanted to open it up to you guys because none of the above three are fintech specialists up to now. And I wanted to check also, compared to the US and the UK that until now are the most advanced in that sector, how much of this is transforming into the UAE and how is the MENA region responding to all that?
For us, we're exploring the region. As you mentioned, you can set up in the DIFC, but that doesn't work for us because we want to have local people to be able to send us money via local transfers. Setting up a company here and the shared ownership is new to us, and we're trying to get our head around this. And figure out a structure that works. But for us, still, the biggest stumbling block is that regulation here still talks about face-to-face, know your customer policies, which are problematic. So, it would be great. It would be great, like if there was, someone that would assist, fintech companies to set up in the region. It's a region where a lot of money moves through. There could be a lot of innovation. So it would be great if there was a body maybe dedicated. And that's what happened in the UK, like kind of assist the ecosystem. It'd be fantastic.
Yeah, I would just say that there is still a way ahead in terms of regulations evolving, simplifying the processes, making it faster. I think we still have margins for improving that area in the region.
Yeah, so we've started a fintech business here. We're a free zone business. Regulation doesn't exist for peer-to-peer. That's not unusual, actually. If you take the UK, for example, peer-to-peer started with Zopa in 2005. The FCA brought in regulation in April 2014. So a lot of times it's for the regulators to understand what you're trying to do, especially if you're bringing a new concept to the region. You tend to have to bring the concept. The important thing for us is that we've modeled ourselves on the FCA regulations, right? So we've taken the FCA, which is probably the leader in this space globally, and we've set ourselves up very much in their, investor money protections, etc., all the kind of standards that they do, with a view that when we are talking with different regulators here, we can start to point to that as a reference point. And then, of course, you're always looking to work closely with them because, again, there's an education aspect. The regulators want to understand, how does this work? Why does this work this way? So I think, can things be improved to accelerate? Yes. Has the UK and the US, the UK is ahead of the US, quite frankly, in a lot of this. The FCA has taken quite a bullish approach to regulation, and what that's resulting is resulting in London being a I think London is the leader now in fintech on a global basis. It's not the US. So that's because you start encouraging the right ecosystems. You get people like in this room talking to people, meeting people. That's where you get the creativity. That's where you get the spark. And I think regulators need to understand that. In this space, as in other spaces, it's only going to get quicker. Right? It's not going to get slower. What used to take them 5 years will soon have to take 3, 1 year, 6 months, because technology will move and move and move and move and move. So I think that's what's important. But it will come, but it takes time.
Great. Thank you very much. So let's open it up to questions. Kia?
Hi, Kia Davis, Anthemis Group. So in your view, so globally in particular, what do you think are going to be the big drivers of how fintech is rolled out, how it's used, whether it sort of flops or takes off on, in different industries? What are going to be the big things? So I'll give an example. I think Apple has an outsized influence on the space, and what they decide to do with payments will disproportionately affect the payments market more so than perhaps even someone like Visa, quite frankly. In your view, are there any other major potential drivers of how fintech will develop?
Yeah, I think mobile is going to be the major driver. Which again, we're not really talking about financials there. We're just talking about communication methods with customers. So I think it will be mobile, and I also think it will be some of the more funky stuff that's being used in terms of payment methods. I agree with you. I think Apple will have a disproportionate effect on that marketplace in the same way that if Apple decides to build a car, it'll probably have a big impact in that industry as well. So I would say, if anything, it's mobile.
I think it's firstly mobile, but then each and every device is going to become either a point of originating payment or a point of receiving payment. This is the future where we are heading for, and with the participation of all stakeholders, we're heading there, and it's going to be natural as we have more innovations, as we have the big players that can drive the consumer behavior engaged. This is how we will reach there.
Yeah, I guess in the physical space, you mentioned Apple because, they have big consumer base and they can affect behavior dramatically. So yeah, seeing what those players do in kind of the day-to-day, how people transact will be critical. But fintech is broad. It's more than just making a payment at a store. There's the funding circle. There's the lending stuff. There's the international transfer stuff. There's credit rating. There's a lot, and this stuff is here to stay. And I think it's a bit more niche and not more niche, but it's a bit more specific, and it's not going to be affected as much by the big players like Apple. There's a whole other area of fintech that will be driven by new companies.
Yep.
Hi. In the region, gold is still very important in terms of where people hold their assets, more so than in the West. Now, given that is where the people do place a lot of their value in traditional assets like that, as you said, it's going to take a lot to move people's trust from those into new areas, which is going to take a lot of public education. Now, are you going to, as an industry, then club together to actually help break through with that trust, with that building of trust? What's it going to take to actually get people to forget about these sort of old ways of sort of holding money and investing and move into fintech?
That's an interesting question. I think, if you look at the West, gold sits in the alternative investment pot and makes up a relatively small amount. Here, physical gold is more of an important thing. But if you speak to a lot of people in the West and you say, oh yeah, I have a certain amount of money in gold, if you actually dig down, they don't have gold. Right? They tend to have notes that have been traded underpinned by gold. So already you've had that disintermediation away from the physical asset. But I think you know, if I just take my space in particular, then, you know, we sit within the alternative investment strategies. You know, you're not going to put all your life savings onto a peer-to-peer account. You're going to put maybe 3 or 4% tops. So you're in that alternative space with, you know, gold or kind of some precious metals of other sorts. And I think, you know, it really comes back to what we talked about before, which is that customer experience and returns. You know, and if you're seeing some interesting returns as part of a broad, diversified portfolio, then you will you will start to put money into different areas. But I think, you know, culturally, and gold is very important here. Property, right? It's the physical asset. Is quite a powerful thing. But going forward, this region in particular, I talked about the demographics. Going forward, you know, you've got a lot of youth. You've got to start driving employment. Employment, as we see it, comes predominantly from the SME community, whether that's startups or whether that's established SMEs hiring people. So you need to make sure that if you're building an SME community that's also a knowledge economy rather than physical manufacturing, you've got to start breaking down some of the traditional barriers. So I think it's an education. It will take time, but it's got to feed into a wider economic debate rather than just, hey, there's some fintech stuff over here.
But I mean, I don't know how they're going to move to investing to alternatives, but, you know, there's that classic, I don't know who drew that, you know, the classic kind of in innovation or like adoption curve, right, where you have, yeah, so it, probably, you know, that's what's going to happen. You have your early adopters, and if the product's there and it brings value, you know, you'll have later adopters, and then, you know, people will move through the adoption curve. So as long as you have, like, you know, enough early adopters in a region, I think it can happen. That's why you see things in, like, you know, in San Francisco, they start very quickly because everyone there's an early adopter. So it depends on how many early adopters you have in a place to kick things off.
Yeah, I think you need the mass consumer. You need to reach the right scale, but adoption is getting much faster. Like few years ago, it took much more longer for new products to make it to the right critical mass, and as we move forward, that period is getting smaller and smaller. So I just believe it's about kind of the right products that will drive the consumer adoption, that will justify the investments. They have to happen sequentially in parallel for it to happen.
Great. Well, thank you all very much. It's a great pleasure, and thank you again.